Good evening, and thank you for joining us. Tonight we turn our attention to one of the most talked about stories in technology and finance, the meteoric rise of NVIDIA, the artificial intelligence frenzy driving its stock, and the growing concern that we may be amid an AI bubble. If you follow tech, investing, or the global economy, this is one you'll want to stay with, and don't forget to subscribe to our channel for real-time insights and breaking updates. Over the past several months, NVIDIA stock has zoomed to record highs as the company became the poster child for artificial intelligence. From chips to data centers, generative AI to self-driving cars, NVIDIA has been at the center of nearly every major AI ambition. Investors poured money into the hope that it would lead the next wave of computing, and in many ways it has. But as the numbers come in, analysts, regulators, and even some insiders are asking whether the market's expectations have grown too big, too fast. On one hand, NVIDIA's latest earnings revealed astonishing growth in revenue and margins. Demand for its GPUs, especially those used in AI training and inference, surged. The company reported backlog orders worth billions. On the ground, major cloud providers and tech giants are lining up for its next generation of chips. So far, the story checks out. The business is booming. Yet the question now being asked is, at what price? And is the stock reflecting realistic expectations or an unsustainable future-perfect scenario? That concern is where the idea of an AI bubble comes in. A bubble forms when valuations get ahead of fundamentals, when investors buy not because of what a company is doing now, but because of what they believe it might do in the future. In the case of NVIDIA, that future includes autonomous vehicles, massive enterprise adoption of AI, broad-scale robotics, and global digital transformation. Each of those themes could reshape industry, but each also carries risk, and each remains partly speculative. Some analysts point out that while everyone expects AI everywhere tomorrow, the timeline is still cloudy. Supply chain constraints, chip manufacturing bottlenecks, algorithmic limitations, and regulatory hurdles all stand in the way. What happens if adoption slows? If growth plateaus? If margins get squeezed? Investors may find themselves holding premium valuations under pressure. These dynamics have begun to show up in the market. While the stock remains elevated, volatility has increased. Some hedge funds are trimming exposure to AI names like NVIDIA, taking profits and increasing their hedges. Others are asking whether the next generation of chips will live up to the hype, or whether a winner-takes-all scenario could leave number 2 or number 3 players languishing. The discussion now extends beyond just NVIDIA. Because when one company becomes the central repository of a megatrend, the entire market starts to hinge on its performance. If NVIDIA stumbles, if the rollout of AI enterprise solutions encounters a roadblock, then ripple effects could hit the broader tech sector and stock valuations across the board. And it's not only the stock market that is paying attention. Regulators, central banks, and policymakers are watching too. When valuation surges and capital floods a narrow set of companies, systemic risk starts to build. Some worry that if this bubble bursts, the fallout may affect broader financial and tech ecosystems, not just a handful of stocks. But to shine a brighter light on this, while the risks are real, many remain bullish. They point out that this isn't dot-com mania of 2000, because the underlying technologies are real, the demand is real, the use cases are multiplying, and enterprise customers are already paying. AI isn't hype, it's a transformation underway. And in that sense, NVIDIA is legitimately executing on a grand vision, not just selling promises. So the core question becomes, is the market pricing in reasonable execution, or is it pricing in perfection? For investors, industry watchers, and tech lovers alike, the bottom line is this. All eyes are on NVIDIA's next moves. How will it manage supply constraints? Will it maintain its technological edge? Can it deliver on new platforms and services that justify its valuations? And crucially, can it navigate the transition from exponential growth to sustainable long-term profit? In the days ahead, the company's guidance, new product launches, partnerships, and international expansion will matter more than ever. And for the market, every quarterly report, every chip shortage announcement, every regulatory development will speak volumes. Before we wrap this segment up, we want to hear from you. Do you believe NVIDIA stock is a bubble ripe for correction, or a generational investment still in early innings? Drop your thoughts in the comments below. We'll be monitoring what you say and revisiting this topic soon. If you found today's analysis helpful, make sure to hit like, subscribe, and turn on notifications. We'll continue bringing you incisive coverage of tech giants, market trends, and the critical stories shaping our economy and future.